right, well, crypto markets bouncing around this week with Bitcoin back above $40,000 after yesterday's weakness. The cryptocurrency hit a low of about $32,000 earlier this week as well. Joining us now to discuss is Michael Novogratz, Galaxy Digital founder and CEO. Mike, thanks for joining us this morning.
Thank you.
There was a lot of pointing to that report, which was questionably sourced and then batted down, at least in terms of the timeline around Amazon and its cryptocurrency plans, as the reason that we saw Bitcoin climb back above 40K. How do you see the pricing action here? What do you think's been driving it?
Listen, crypto loves a rumor like that, and that was never confirmed, and no one really thought that was happening. Crypto's bounced back because institutions are buying, right? If you saw like FTX, which is a offshore exchange, raised $900 million at an $18 billion valuation from some of the best investors in the world. I think that sent a signal to the whole crypto market that this isn't going away, that institutions want to pile money and the smartest investors in the world are participating. And that got the shorts covered. And so this was partly a big short covering rally and partly recognition that this is a real market that's not going anywhere.
Yeah, there's been a lot of back and forth, particularly in the past week or two, about the argument, or I guess people trying to bat down, critics trying to bat down the argument that Bitcoin and cryptocurrencies are an inflation hedge. Given the fact that we are coming into comments and more policy details from the Fed today, how do you see it? Are there holes that have been punched into that argument around it being an inflation hedge, given some of the action we have seen in recent weeks, recent months?
Let's remember that, Ethereum is 6 years old and Bitcoin is 13 years old. So we're still very early in the adoption of these new technologies and these new assets. People are buying Bitcoin because they have worry that our fiscal and monetary policy is out of control. And so, yes, it's a broader debasement of currency hedge. It's a broader debasement of fiat money hedge. That's mostly an inflation hedge. It doesn't mean it's going to go tick for tick with every CPI number.
Let's talk a little bit about regulation and what that potentially could look like here in the U.S., given the fact that we did have this hearing yesterday. We've got Senator Elizabeth Warren coming on the show a little bit later in the morning. I mean, yesterday she said that she warned that Bitcoin, quote, price fluctuations put retail investors and businesses who accept Bitcoin as payment at risk, and then went on to say that the only individuals who use Bitcoin as money are criminals. How would you respond to some of the commentary we got from her and other lawmakers yesterday?
It's disappointing. Elizabeth Warren is 72. I haven't met anyone, or very few people over 70 that actually get this, right? She's a baby boomer, right? We had 3 presidents, Bush, Clinton, Trump, all baby boomers who have run this country for a long time. Our country has deficits that we couldn't fathom, right? So if you're Gen Z or millennial, you're looking up and saying, hey, the baby boomers have not done a great job as stewards of the economy. They've been in power a long time. And so the crypto revolution came from Gen Z and millennials as a response to people like Elizabeth Warren. It was disappointing. She was supercilious. She was smug, really disappointing that she hadn't done any work. This is a progressive technology. She's supposed to be a progressive, right? Crypto goes after the rent takers. If you look at DeFi, if you look at the NFT revolution, it's going to empower artists and creators over the people that used to make money off their backs. And so really frustrating and disappointing. It just tells us at Galaxy and us as a crypto community, we need to do a much better job going to DC and educating people.
Hey, Mike, I understand and appreciate philosophically the idea that ultimately this should disrupt the financial system that you're discussing. But at the same time, the truth is, at least right now, the transaction fees that are associated with things like Bitcoin and Ethereum, with the funds that people are using to sell, indexes, versions of crypto, are higher than just about any other financial instrument out there.
Well, that's not completely fair. Like, I could send you right now $1 million worth of Bitcoin, and it would cost me like 27 cents in transaction fees. And so there's no cheaper way to send money than Bitcoin peer-to-peer direct. And even in things like our ETF up in Canada, we charge 40 basis points. That's cheaper than most ETFs in America for equities. And so you're going to see fees come down. Look, this is a new industry. Are there scamsters around? Yes. Are there people opportunists? Yes. But it was a little bit like when Paul Krugman said in 1998 famously that the internet an open permissionless peer-to-peer system, right, that you could build on top of, would it amount to more than the fax machine? I kind of felt that was Elizabeth Warren yesterday.
Mike, I appreciate where it could go. I'm just saying right now on Robinhood, on Coinbase, if you are to transact in crypto, that's where the margin is for them. There's a lot of people making a lot more money there than they would be on most other financial instruments. So this idea that it is somehow, a frictionless system, it may be in the future, but today it isn't.
But no system's frictionless when it starts. It's moving that way very quickly. Remember, we're in the early innings of this, and so you don't want to throw the baby out with the bathwater. Like, we're supposed to be creating a system where innovation actually explodes, right? DeFi is going to work. Decentralized finance is going to work because it's better, right? We wouldn't have had the mortgage crises if everybody saw the balance sheets of Bear Stearns Asset Management and Wachovia and all the other places that blew themselves up, right? DeFi is transparent. It's got instant settlement. I mean, Elizabeth is out there defending the banks, right? You look at the overdraft charges of the banks last year, or the fact that it cost $4.64 on average for an ATM withdrawal.
All right. Mike, we have to leave the conversation there. Look forward to having more of it at a future date. Mike Novogratz. We'll be right back.
Thanks.